you're paying down the principal on the loan,
Right.
when you get ready to sell your property, you are paying the lender back the amount of the loan. So anything that has been reduced is really your money.
Hi, I'm Vicki Grodner, and I am the College Real Estate Coach. I'm here today with my husband and partner in real estate crime, Ken Grodner. We work together in our real estate business, and so I'm going to let Ken introduce himself and explain to you why he's my numbers guy.
Absolutely. Thank you, Vicki, and thank you for having me on your show. So my background is accounting and finance. I started my career as a CPA and spent the majority of my career in finance, accounting, and consulting, and have now leveraged that background into real estate. I enjoy working for you, by the way, and excited to talk a little bit about the numbers.
Great. So today we wanted to talk about why it makes sense to buy real estate versus renting. Obviously, this can apply to anybody, but of course it does apply in college towns as well, especially when parents think about should they be buying for their student while they're in college over that 4, 5, 6 years, or should they be renting during that time, or a combination of the two? So Ken, I guess my first question is my most basic question. When is it a good idea to think about buying?
So I think when you have the opportunity to buy, you should buy. I mean, Vicki, studies show that folks who own real estate have an amount of wealth that's 40 times on average the amount of wealth people who rent.
So staggering. I mean, that's really an insane number.
It really is.
But it tells a story.
So I think if you have the ability to buy, that is the right answer in most of the cases.
Sure. Is there a reason that people should think about renting as opposed to buying?
I think a couple of reasons. So one would be if they need to get into a property immediately.
Right.
There is a process for buying. Sure. It is a legal contract, which has a lot of steps, to it. So if you need to be in something in a week, you're probably not going to be buying.
Right. Yeah. Tell us again. I mean, I know, but how long does it typically take to buy a property?
If you're paying cash, you could probably get it done in 2 or 3 weeks. If you're financing, lenders generally need a month to 40 days.
Right.
Yep.
Right.
So that would be the big reason, is if you need something immediately. I think the second reason is if there's a lot of financial uncertainty in your life. You're not really sure whether your position is a stable position or not. Maybe there've been some layoffs and you've got some anxiety about that. Maybe you don't know whether you're going to stay in the town that you're buying in or
for the long term.
For at least midterm.
Right.
And if there's a chance that you're going to be transferred in 6 months, 9 months, you probably need to sort of get that sorted out.
What about if, I think I might be transferred in a couple of years? Can it still make sense for me to buy?
Oh, I think so. I think a couple of years, absolutely. And, even if that does occur and you have the opportunity to then rent out your property and turn it into investment property, then you have 2 assets growing for you.
Right, exactly. And that's how people grow that wealth, right?
That's right.
Talking about.
That's right. They just grow it that faster.
Right. So what specifically does it take to be able to buy real estate?
Right.
So I'm a parent, or even I'm a student, or by the way, I'm just an individual and I'm like, okay, I think I'm ready, but are you really? What does it take? What's required?
That's a great question. So I think first of all, it is a responsibility. Just like owning a car is a responsibility, having a pet is a responsibility. So one is you have to be committed to taking care of your asset.
Right.
And all that's involved in that. So that would be one. 2.
So you're saying when the pipes get clogged up, it's my responsibility?
Well, it is your responsibility to call the plumber. So, and so that's something that you need, as opposed to calling the landlord.
Exactly, that's right.
Yeah, you're right. Okay, so that would be one thing. The second thing I think you need to be prepared for is to have if you're not paying cash, to have a lender
Right.
that will approve you for a loan. So that would be a credit history on your end,
Right.
or there are other ways that that you can do that if you don't quite have that.
Sure, sure. And so when should I do that? Like, do I find a property and then I go worry about talking to a lender, or like, what's the order of the process there?
I think you really want to start with your credit approval. It will help
I would
you.
agree with that.
I think it'll help you know what a lender is actually going to approve you for.
Right.
And there are some agents that actually won't even allow you to view a home without a pre-approval. So,
Right.
I just think there's a lot of good reasons for you to know what you're going to be approved for before you begin your process.
It also understanding your monthly payment, right? I mean, a lot of people, if you've been renting and now you're thinking about buying, you want to know, is my monthly payment going to go up? Is it going to go down? And so,
so let's talk about that. So that probably would be the third reason that you need, the third criteria to be ready for purchasing is the financial. And you're very right. So if you're renting, you've got a security deposit and you've got your monthly rent. Now, that monthly rent is going to be going up on average 5% a year.
Yeah.
On average.
And you can't tell the landlord just to stop. Put the brakes on that. I don't want you to raise my rent over again.
You can, but you're probably not going to get very far.
Successful.
That's right. That's right. So the average rental in this area is $1,500,
Right.
and 5% a year on average over the next 5 years takes you to about $1,800. Wow. That $1,800 is the same monthly payment on a $250,000 property.
Interesting.
So after 5 years of renting, you're really at that same number that you would then be paying for a property. Now that, as you mentioned a few minutes ago, that payment has a lot of components to it.
Right.
It has principal, which is actually taking money out of one pocket and putting it into another pocket.
What do you mean by that?
Because when you're paying down the principal on the loan,
Right.
when you get ready to sell your property, you are paying the lender back the amount of the loan. So anything that has been reduced is really your money.
Right. Right.
So a portion of your payment is out of your left pocket and into your right pocket.
Okay.
A portion of your payment is interest. That's what the bank gets, for lending you the money. And then, as you mentioned, there's property taxes and there's insurance. But again, all of that combined on a $250,000 property, which is the average, actually, the median price, I would say, of properties sold last month in our area. That's essentially the same as a rental payment over the, in a couple of years.
Right. Is that taking into account that you have a down payment? If you don't have any money, can you still buy real estate?
I got a call yesterday from a client that has absolutely no money down, and they were looking for what's referred to as a USDA loan.
Right.
So that would be a loan with no down payment. I have another buyer.
But it has some specific criteria on where it's got to be, right?
Now that's a true statement. That's a true statement.
So USDA is in a rural area, right? So,
That's right.
Yeah.
That's right.
Okay.
So you got to be willing to drive a minute.
Right. That's right. So
Fair.
you're not going to be getting that in downtown Birmingham, downtown Atlanta, or downtown Tuscaloosa.
True statement.
You got to go out a bit.
True statement.
Okay. Go ahead.
Okay. There are first-time buyer programs.
Okay.
There are professional loans.
Right.
There are lots of VA and FHA only require 3% down.
Okay.
So on a $250,000 property, that's $7,500. So for $7,500, if you've got that saved,
Right.
you can get a FHA or VA loan.
Right.
VA would be a military related. FHA is for anyone.
Right. Right. Okay. And I mean, what other financial tips do you have for people, again, if they want to buy for the first time, or, well, let's start with that. If they want to buy their first property.
I think start saving today.
Yeah.
Whether that your pathway to wealth begins today with you foregoing that Starbucks.
Well, dang it.
I know it. or maybe finding a way to be compensated through services that you provide over the internet. There, people get paid for, answering surveys or whatever. But there are, lots of ways that you can begin to earn extra money and begin saving
build a
that
nest
money
egg,
to
yeah.
build a nest egg. So if you can't buy today, maybe you can buy a year from now, and that goal helps
Right.
you save the money.
Right. Can somebody help me to buy a house if I don't think, like, I'm a student, for example, and so I don't maybe have a full-time job, or I don't think that I'm earning at a level where I could qualify for a loan? Can somebody else help me?
You know, we have spoken to students and first-time buyers and their parents about why it is, a really good idea to do that. And, I think sometimes parents say, I had to make it on my own. They need to make it on their own. The words that I have offered to my younger first-time buyers is to say, Mom and Dad, why don't you look at this as sort of an advance on your inheritance?
Oh, that's a good way
I mean,
to describe it.
essentially they're gonna get it. But why don't you give it to them now when it makes...
If they have the means.
If they have the means.
That's right.
When it really has a profound impact on their life.
Right. Okay, any other tips?
Financially, I would say yes. This $250,000 property that we've been talking about, and I use the 5%.
Right.
Let's say the property goes up 5% a year over 5 years, which is
a reasonable number. Yeah.
And happens to be the average over the last 30 years.
Right.
You know what, Vicki? By borrowing the majority of that, your $250,000 asset in 5 years, over $300,000.
That's crazy.
Over $300,000. That's $50,000 of growth, equity, wealth that you've accumulated by borrowing from the bank. Yes, you're paying them interest, but you are getting the appreciation or the increase in value, not them.
Right.
And guess what? Your monthly payment never goes up.
Well, that's a valuable thing to point out.
Yeah.
For sure.
Yeah.
Right.
So rent's going up 5%. Your monthly payment does not. And if interest rates are reduced, most all lenders now will allow you to refinance. So there's a chance your monthly payment will actually come down.
So Ken, thanks so much for being with us and talking about the financial issues related to buying real estate. I am the college real estate coach.
And I am Ken Grodner, and thank you for having me.
Thank you for being here.